Thank you very much for joining us today, and I hope everyone's having a very productive conference. I think we're sitting in a pretty unique time in this industry right now where you have opportunities with really exceptional value in markets that are overlooking them. And so I think I'm going to tell you today about one of those stories, which is our company, First Mining Gold. I'm going to make a few forward-looking statements here. We are advancing two of the largest undeveloped gold projects in Canada. Our Springpole project in northwestern Ontario is one of the most advanced projects from a permitting standpoint. So we're in the stages of our final environmental assessment, expecting approval on that by the end of 2025. And our Duparquet gold project in the heart of the Abitibi Gold Belt, sitting today at 3.5 million ounces of measured and indicated resource, 2.5 million ounces of inferred, and lots of room for that to continue to grow. We'll keep telling you how that's going to move forward as well. Both of these large, well understood, well drilled, geologically de-risked projects in advanced stages of development. And again, in one of the things we're learning more and more in this world, in terms of jurisdictions, big mining companies want to be in tier 1 jurisdictions, and that's something that's a very important component. So we have a couple other projects. In the interest of my 10 minutes of time, I won't spend much time on them, but these projects are important to us because they do provide us with some financial flexibility. So we've been able to take a number of these projects and turn them into cash by bringing in partners and creating royalties and selling royalties. More than $60 million of cash over the last 5 years to be able to advance our main projects. Sitting today with a market cap of about $130 million, reasonably well funded, ended last quarter with $14 million of cash on hand and another $3 million of marketable securities, and good daily trading liquidity, a couple million shares a day. And importantly, management and directors, particularly our founder, Keith Neumeyer, do have a pretty significant position in this company, but it's a position that's been purchased in financings and in the open market. So you have a management and board that are very aligned with the shareholders. Don't need to tell a lot of people in this audience this story. This is one of the things that, while it has been frustrating, it's one of the things that gets us very, very excited. Over the last few years, you've seen the gold price perform very well in challenging macroeconomic environment. You've actually seen gold producers start to catch up to what were lagging valuations over time. But gold developers have continued to suffer from this lack of investor interest and are trading many, multiple million ounce gold projects, trading at valuations as low as I have seen them in my 30 years of my career. This is a really unique opportunity. Investors wait for their entire investing careers for dislocations like this in a market, and we're seeing one today. And what is important about this is that if you look at the valuations of larger gold mining companies, they have started catching up. Still reasonably attractive if your risk tolerance is, I want gold exposure, but I'd like a producer. It's still reasonably attractive valuations from a cash flow perspective, still quite low in terms of what you'd see over a cycle. But for a lot of developers like us, it's never been cheaper to look at acquiring assets like these. And larger companies have been acquiring these assets. If you look in Canada, over the last 5 years, over the last 10 years, almost every 5 million ounce gold project that has received its environmental assessment approval has been acquired by another mining company for $500 million or more. And we've got two projects inside First Mining that fit that criteria. This has been accelerating. We've seen more and more activity, particularly over the last couple of years, you can see. And this is only going to accelerate because large gold miners need to replace their reserves that they have been mining. They haven't been able to do it through exploration. And so ultimately, they are going to need to come and acquire new projects. What do they want to acquire? Projects that can produce in significant scale and projects that are located in tier 1 jurisdictions. We have both of those. So if you look 5 years ago, we were at the beginning of a development cycle in Canada that had really 7 major gold projects being built over the ensuing 5 years. You fast forward to today when all of those projects are now basically built and starting to pour gold, and you look at this list of projects that can be developed in Canada, this is what you're left with. And if you further filter this list by projects that are in advanced stages of environmental assessment or permitting, we are really, with our Springpole project, we think certainly the next project to get federal environmental assessment approval. We'll talk about this in a minute, but we've been in the federal EA process since 2018 and gone through the concurrent provincial process. So we've done the hard yards. I'll tell you what, it's been hard yards. This has not been an easy market to raise money to advance projects. And that's why we are one of, really in this list, maybe 2 or 3 projects that you could put shovels in the ground to start building before 2030. There is a fundamental lack of projects that larger gold mining companies can actually use to develop their own pipelines. And we've got a couple of the most attractive. So just sitting today, when we think about the value in our company, we've got between our 2 projects, and these are from our engineering studies, our pre-feasibility study at Springpole, done in 2021 at a $1,600 gold price. And our Duparquet project that has an NPV there, you can see just shy of $600 million. Again, at an $1,800 gold price. That was done in late 2023. We think based on those study prices, we've got sort of net asset value per share of more than $1.80 per share, and we're trading at 12 cents. But what gets really interesting here is when you look at this same chart and you factor in really what the leverage to the gold price that our projects have, and you look at this net asset value per share at anything near a $2,700 gold price, that number would be more than $5 a share. And you can buy our shares today in the markets for 12 cents. So I'm not saying we're going to get to $5 per share tomorrow, but certainly through a development trajectory where we're actually taking these projects through permitting processes. Historically, those kind of companies, when you get your permits, have traded at 0.5 to 0.7 times that net asset value. So there is a really clear direction here in which we can see upside just by continuing to execute on our game plan here. And every $100 in the gold price is $250 million US of value to our projects. And most of those studies we've done were done $1,000 ago. So we can do the math. If you believe these projects are going to go forward, and I think we're in a pretty good position to demonstrate that these projects are going to go forward, there's phenomenal leverage to the gold price in these large projects here. So I've only got a couple of minutes. I'll just give some quick updates on our Springpole project. Again, located about 100 kilometers from Red Lake. One of very few projects in Canada that can produce more than 300,000 ounces a year as we have it scoped. So this is large enough to be meaningful to the biggest gold companies in the world. And a very robust project. So advanced stages of environmental assessment, and that's something that's really important to understand. We've been in the EA process since 2018. And we submitted our final environmental assessment document in November of last year. The public comment period on that has actually now closed. So we should be receiving comments back from the regulators sort of by the end of the month and working through those over the course of this year and targeting an environmental assessment decision, certainly federally, by the end of 2025. Which again, if you haven't done the hard yards, this is really the most difficult part of surfacing that value in a mining company. Continue to make very good strides here, and just for context, we've been in this process working with the regulators for 2.5 years. So we submitted a draft environmental assessment in 2022. So we've already answered 1,900 comments and questions. We feel we're in very good shape to continue to hold this timeline for an approval by the end of 2025. Don't have time to get into it, but there's exceptional exploration upside both at the deposit at Springpole and around the district. And just a couple of minutes or a couple of seconds here on Duparquet in the middle of the Abitibi Gold Belt, one of the largest endowments, gold endowments, 2 past producing mines. an amazing area of infrastructure. If you're going to look for a gold project of this size and scale, you want to look in the most sought-after gold belt in the world, and that's exactly where we are. The key takeaway is we're going to see Duparquet, which is sitting today at about 6 million ounces resource. We see a very clear path to see that moving toward 10 million ounces. So that's the story. Thank you very much for your time, and I hope you all have a great conference.